In this video, I'll be sharing with you my market analysis for the week 27 November to the 1st of December 2023. So we'll be taking a look at the market indexes first. So the main market indexes, the S&P 500, the Dow Jones, the Nasdaq, and the IWM. Then in this video, I'll also be going through some of the stocks that I currently have in my portfolio and do a run through of how I'm managing them, like managing the positions and the reasons why I took the positions. All right, so let's begin with the S&P 500. So based on my previous week's video, you guys know that there's a change in the trend of at least in the short to intermediate term for most of the indexes, right? So if you take a look at the S&P 500, for example, right? So I mentioned two reasons why I'm bullish, at least for the short to intermediate term, is because the S&P 500 broke this downtrend line as indicated by this red line over here. So you can see that this downtrend line was broken over here. That's the first thing. The second thing was that there's a change in character for the S&P 500. So the S&P 500 actually gap up a couple of times. So you see this was the first, second, and then the third, right? So the change in trend or the change in character of the S&P 500 is why I believe that at least in the short to intermediate term, I'm bullish on the stock market. Right, but with that said, right now the S&P 500 is actually at a crucial zone of resistance. So this zone of resistance is the green rectangular box over here. So as you can see at this area, so the previous time over here, prices encountered resistance and it fall back down. And then like if we move further back out over here, you can see that there are multiple times that the S&P 500 reached this level and then it couldn't break above. Right, so this is an important area of resistance that I'm taking a look at. So ideally, what I want to see from the S&P 500 is that it moves sideways here, or even like pull back a bit. So the first area of pullback that I'm taking a look at is the 10 moving average, indicated by this line over here. And if like the worst case scenario is that it declines back to the 21-day moving average. So ideally, it falls back to this 2 moving average, right? So we want to see prices consolidating over here, moving sideways or pulling back slightly before we move up, right? So that is a bullish thesis or something that I'm taking a look at for the S&P 500 to continue moving up. The next one we'll take a look at is the Dow Jones. So similarly, the Dow Jones is also moving into an area of resistance, right? So it's not quite as near to the resistance as compared to the S&P 500, but this line over here I indicated at around $356 is an area of resistance, right? So this was the first time that prices encountered resistance at this level, and then you had like multiple times over here, right? So and also you can see that actually the Dow Jones is also quite extended from its key moving average, so the 10 and the 21-day moving average. Okay, so for the Dow Jones, it's very similar to the S&P 500. It broke above its downtrend line and then it had multiple gaps up, right? So similarly, there's a overhead resistance over here, and then but for the Nasdaq, it's not quite as extended away from the 10-day moving average as compared to the Dow Jones, right? So ideally, similar to the S&P 500, we want to see it consolidate just below the resistance area or pulling back without too much of a decline, right? Then we let the moving average catch up with prices before prices break to the upside. And then the next one is the IWM. So the IWM is an interesting case, right? So far a lot of the big caps or the large cap stocks have been pulling up the averages, right? So the market indexes. So we have like the Magnificent Seven. They have been dragging the indexes up. So what we want to see is that as prices take a break or it moves sideways and consolidate for a while, we want to see some money rotate into the smaller to mid caps. So that's what we want to see from the IWM. So right now the IWM is actually encountering resistance at the 200-day moving average. So this is the black line over here, right? So encountering resistance. So you can see there's a clear rejection over here, and then prices couldn't break above this level. But we can see that prices are actually tightening up over here. So ideally, what we want to see is prices breaking above this 200-day moving average and then breaking to the upside. So this shows us that actually, there's an increased breadth in the overall stock market, right? So from the large cap to the smaller to mid caps, right? So that will make the rally more sustainable. So that's for the IWM. So right now I'll be actually going through some of the stocks that I own in my portfolio. Okay, so over here let's arrange by percentage change. So I actually have 1, 2, 3, 4, 5, 6. So I have 6 stocks in my portfolio and then 1 crypto. So the crypto is not in my stock portfolio, but it's in my crypto portfolio, right? So I'll also be going through that in a minute. So the first one we'll take a look at is DRCT. So I actually have a position in DRCT back over on this day over here, so the 17th November, right? So you can see that actually prices gap up on its earnings, right? So if we take our price to over here, it actually gap up about 33% on earnings, right? So you can see that the earnings was quite good. So there's a 283% year-over-year increase for its EPS. And then for its sales, there's a 129% year-over-year increase. So triple digit increase for both EPS and sales in the most recent quarter, right? So we know that the fundamentals are strong in terms of its earnings, and then the price action is also confirming that, right? So you can see that prices actually gap up on this day on strong volume. So the volume was about 22 times the average. And then you also see that it managed to hold its gap up, and then it continues to move up. Then moves sideways for one session over here before breaking out. So on this breakout over here, I added my initial position. So I'm also going to share with you how I manage my position in the stocks that I own, right? Because I entered my initial position, I take some profits, and then I look to add back up if a good opportunity sets up, right? So if the prices sets up again, then I'll look to add my position. So over here, I bought, and then at this green line, it was my 3R profit target. So 3R means that let's say if I'm risking 1R, so let's say if I'm risking 1R is equals to $1, right? So I'm making at least $3 or more. So over here at the 3R profit target level, I take half my position off to secure my gains, and then right now I'm actually trailing my stop loss. So my stop loss was actually like around here, and then since now that prices have moved up, I also have moved up my stop loss, right, to a level that's higher than the break even. So what this means is that on half of my position, I secured a 3R profit target already, and then on the other half, the worst that can happen, unless there's a gap down in the stock, the worst that can happen to my position is I break even on the remaining half. So this will give me an average of a 1.5R profit, right? So because the first half is 3R, let's say the second half it stops me out at around break even, then that's a 0R trade. So if you add up both, it will be a total of 3R divided by 2, so I get a 1.5R profit on that trade. So that's how I manage my position. And over for this one, actually I saw that prices also move sideways for a while, and then I pyramid into my position over on this day over here. So this is how I manage my position. So if prices continue to act well, then I will further add my size into the position, because prices might continue to move even higher. So if I scale in and I pyramid up my position into the stock that is already working, then I can stand to gain larger profits if I enter a larger size in the stock. Right, so right now I'm just managing my position, and then I'm also managing my stop loss on this one. The next one is JELD. So the reason why I bought JELD is that it has a strong move up over here, right? So you see multiple times of gap up, right? So this was the first gap up, second gap up, third gap up, and fourth gap up. And then over here, prices actually tighten up a bit, and then I bought on this. Sorry, not this one. I bought on the breakout over here. So it actually reversed, but it didn't stop me out. And then the next day, actually prices break above this level. So it's quite constructive. So hopefully prices continue to move up. But if prices do reverse back on me, then I'll get stop out for small loss. The next one is DUOL or Duolingo. So actually Duolingo I entered at a earlier position. So I entered at this day over here. So this was on the 20th of November. So you can see actually the fundamentals is also quite strong for this stock. So the most recent quarter, EPS increased 113% year over year, and then sales increased 43%, right? And then you can see it's backed up by the price action, right? So prices gap up over here on strong volume also, and then it managed to hold its gap up, and it moved sideways, and then it hold above this breakout level, right? So this level, the reason why I draw this line is because this is a resistance, right? So resistance all the way back in 2021. So prices breaking above this level, and then it actually hold this level is why I believe that this stock is putting in quite a bullish action. So I bought over here, and then right now I actually further add my position and scale up on this day over here, right? So you can see that here was sort of a small resistance area, and then prices broke out of this, and then I add my position. So I'm still managing my position. I think net I'm like maybe slightly above my entry price. So I'm looking to manage my position for Duolingo. So as you can see, like so far the two stocks that I scale in is because one, the fundamentals on those two stocks are good, right? So you can see that the most recent earnings, the fundamentals are good. For DRCT was the same thing. The most recent earnings was good. And then both, and it's not just the fundamentals must be good, right? So the technical and the price action has to confirm the fundamentals, right? So you can see for both stock, the technicals and the price action is quite positive, right? So even though we can have two of them aligning and showing us positive action, we do not want to forget about stop losses and managing our risk, which is why I also have my stop losses for these two stocks. Okay, so the next one is KYMR. So I bought over here. So actually prices gap up over here. So usually most people who do breakout trading, they wouldn't buy on this gap up. But for me, because I've did my studies and I've seen like the past stocks that have made big moves, sometimes they do gap up to the breakout level, and they break out and continue their move from there. So that's why after doing those studies, I have more conviction in entering this kind of trades. So previously, before I did my studies and research, I just took it by face value that I should avoid this kind of gap up breakouts, right? So, but I did my studies, then I have the conviction to do it, which is why I entered over here. So similarly, there's a powerful prior move over here. They found support at the 10 and 21 day moving average, and then it gap up. I bought over here. And I actually sold half of my position at this green line, so at 3-hour profit target. Right now, I'm just managing the other half, right? And my stop loss is actually not at break even, but slightly higher than the break even level. So that's for KYMR. The next one is TGTX, right? So similar, strong move up, then it moved sideways, found support at 10-day moving average. I bought at this breakout over here. And then I sold half at this green line at 3-hour profit target, and actually I added back my position and scale up again on this day over here. So you can see I bought above this breakout, but prices have closed slightly below. But net I'm still up on this position, and I'm looking to continue to manage my position in TGTX. So for TGTX also, the most recent earnings was good, right? So you have 381% year over year for EPS. And then 176,299% increase year over year for sales. So that's some strong fundamental supporting the price movement, right? So that's for TGTX. The next one is our RCKY. So strong move up on earnings. Move sideways for a while. I bought at this on this day over here. So this was a cheat area, but I missed out on this one. But then I bought on the opening of the next trading session, which was this day over here. So prices gap up a bit, but it's not too far away from the breakout level at over this red line over here. So which was why I still bought it over on this day over here. And then right now, I took half position off at this green line. So that's the 3-hour profit target as usual. And then right now, I'm just managing my position in RCKY. So the next one, this is a crypto, right? So I actually bought over here. Then it moved sideways again. And then I further add my position over here. Right, so actually I just sold my my position that I bought over here at this level over here, because it has broke slightly below the 10-day moving average, so I decided to take some of my profits off first. But my original position, I'm still in, so I'm still trailing my stop loss at around this level, so below the lows of this day over here, right? So as you can see, you might be wondering, like, hey Linus, like it's like too good to be true that all of your positions are in profit, right? So yes, and let me explain to you why, right? So the first reason is because yes, I did my research and my study, but it's also because the markets have been performing very well in the past few days and weeks, right? So that's one reason, right? So most of the stocks tend to follow the market. So if the markets are doing well, the stocks also do well. The second one is also all I'm showing you are my winners. I didn't show you my losers, right? So I do have my losers, but the reason why there are no losers in my portfolio right now is because all of the losers, I've already cut them out, which means I already exited my position. So if I'm wrong, I quickly exit my position, which is why the stocks that I'm holding right now are all in profit already. Because if there are losses, I will have already cut them out for my portfolio. And that is why right now my portfolio, as you can see, is all in profit right now. Right, so that's a quick overview of my portfolio and a quick update and analysis of the indexes. So moving forward, in this coming week, I'm looking to be more selective, and I will not add so much position size in any new positions, because right now, as I mentioned, the indexes are currently facing overhead resistance. So we might be due for a pullback or at least a consolidation. So even if I do add new positions into my portfolio, I am not looking to add much size into them. Right, so hopefully you guys have learned something from this video. If you did, smash the like button, because it really help the channel grow and allow me to produce more content such as this. So to your financial success, and I'll see you in the next video.